Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. Well, to be honest, it's very difficult to find something really new to talk about because you can see market within the 6 weeks stands in really tight range. And in fact, on the daily chart, those who trade on the high time frames on the daily, they could do actually 2-3 things, not more. So actually, you could just wait for a breakout, or you could accumulate positions depending on your view on the common situation, how situation will work, will turn. So for example, if you have bullish view, you could try to buy it every time when the market comes close to the 1750 area. It's accumulating long positions. Oppositely, if you have the bearish view, you could try to sell and adding more bearish positions once market is coming to the 1950. Well, despite whether you're accumulating position or not, currently we do not have any clear hint on the direction. And this accumulation could be really costly if the breakout will follow in the opposite direction. Second way, what usually traders do in the current circumstances, when the volatility drops significantly, it could either use the stop entry orders. For example, traders put one cancel other orders or just not linked orders, because only one will be triggered, buying above this area and selling above this area. And you can see the volatility dropped very significantly, as oversold currently stands right near the minus 30% level. So it means that, well, volatility dropped very strong. Or you could just buy options, out of the money options, buying strangle, pattern with the out of the money put in calls, hoping on the breakout. That's usually traders do in the current situation, or just sitting on the hands. This week we have actually only one single important event. This is Fed statement, and market reaction was very short term and not very strong. It means that investors mostly have seen in the Fed statement only the same things. This rate will be near the zero for 2022 or even 23, and Fed will continue to provide liquidity measures, some liquidity to the markets to trigger the employment and support the economy. But at the same time, some things that Jerome Powell said have been missed and do not appear in the headlines of the news. So first of all, he said that the recovery is already here. So they see the recovery. That's why they have not increased the bond purchasing program and keep it at the 120 billion per month. Second, they have not announced any new liquidity measures. It means that they see some recovery process that stands underway, and probably sooner rather than later it should appear in the statistics that we will get on the market. In the coming week, the new cycle of the earnings report starting in the United States. It also will be a very important source of information on how economies stand. And as Fed has changed in a positive direction, reviewed to the upside, the forecast on the United States economy, well, it makes us think that in the long term, the balance will start to change. And yes, dollar probably will be under pressure until the elections. But close to the end of the year, somewhere in the end of the November, December, the balance could change, especially if European Central Bank will not take any additional measures to support the economy. Well, that's what we see currently from the Fed statement. So some important things have been said, but somehow they were missed mostly by majority of the market participants. Anyway, in the short-term perspective, guys, on the daily chart, at first glance, it's nothing to do, but well, and standing in a tight range for a long period above just minor level supposedly should be bullish, because even when the market hits some very important levels, as you know, the COP monthly butterfly on the weekly charts was a bottom on the weekly chart, but despite all these targets and patterns, no significant retracement has happened. Even 30% pullback has not been formed, although the 30% retracement wouldn't hit the bullish trend anyway. So it absolutely can't hurt this with the forming of just minor pullback. Yes, it looks bullish, but at the same time, the thing that I think we have to keep an eye on is the possible symmetric harmonic reversal shape. So as you know, when the market forms extended reversal patterns, especially if it looks like round top, or you could call it as a cap, many people call it a cap, well, it takes a lot of time to be formed, and in all this time market stands in a tight range, but then it shows the fast breakout, and that's the pattern that we should keep an eye on. So because that could be not just a positive bullish consolidation before the upper breakout, but it also could be reversal shape, and that's what's important. Still, as I said, until we will get the breakout or clear signs of the reversal on intraday charts, we have to do nothing on the daily chart, unfortunately. And today, in common week, we probably anyway will be focused on only on the intraday setups that we have. Actually, the setup that we discussed right now is not new. We talked about it in last week, and mostly it stands on the hourly chart. This price action, a fast recovery after the Fed statement, if you will plot the 8 hours bar chart, you will see that this is bullish engulfing pattern, as I explained already on Thursday and Friday. And this shape suggests the upward continuation, so it has good momentum actually, fast recovery, and here we could consider some kind of the A, B, C, bottom D pattern that could push market back to the 1950. By taking a look on the daily chart and the symmetry that we have, well, in general, there's no objections on the shape that market could form slightly greater spike here compared to this one. Something of that sort could be formed, and it will not break the harmony of this overall shape that we have here. So that's now, that means that currently it's the major question from what point market could reverse to the upside. Currently, we have few different reasons to choose the C point. First of all, take a look at this point. First glance, it's also harmonic to this one, right? So minor retracement break down, and starting of the upward direction was very accurately right from these lows. But take a look what has happened after that. This upward reversal, this is actually a reversal candle, you can see. Market starts dropping lower and almost erased it. I think that on a Monday, this action will be erased, and mostly it reminds me some minor wash and rinse here above this area. And here we have the small double top pattern, something of that sort. That's why I still think that we should consider the reaching of the 1816, 1819 area as confidence support. And also, I do not exclude the chance that we even could go right to the 1790 because of this double top. If you calculate the target of this pattern, it precisely will be standing approximately around 618 support. So if you have the bullish on the year and you're searching chance where to buy and how to buy, you could split the position and buy gradually on different levels. So buy here or something, then if market will drop lower, well, add more here. And that lets you to possess yourself with this possible pattern with the target around 1950. So that's the only setup that we have currently on the euro currency that actually we could discuss, because nothing more exists here. And let's see how it will turn. Also, we will keep an eye on, as I said, on some harmonic shape of the reversal. If it really will be confirmed by the price action, that at least will give us some hint on the further direction and will tell us that probably drop on the euro still will happen. The recent Committee of Traders report, by the way, hints on this, because a lot of longs have been closed by the speculators on this week. Maybe this was preparation for the Fed, but maybe it's not, and that mostly stands in agreement with our suggestion that the euro is a bit overextended and needs some relief. So that's two things mostly to keep an eye on your accounts. And let's see how situation will turn on the coming week.